Hello, and welcome to the Cryptocurrency News channel. This has appeared on my Twitter feed about 500,000 times, so I actually have to address this point. Is vTHO undervalued when compared to VET? And there's an interesting calculation. It's actually quite simple that says vTHO should be about roughly 30% of VET's value. VET's value right now is around 6.5 cents, so vTHO should be around 2 cents. Of course, vTHO is about 0.6 of a cent, which makes it about 3x or 4x undervalued with respect to VET. Now, this kind of calculation comes from kind of the fact that companies, when they hold assets, they want that asset to generate around about 5% APY. Now, I've gone through the math, and each vTHO each VET per year generates about 0.1567 VET. And that is 15.7% APY if VET and vTHO were the same value. Now to get that 5, you kind of have to divide that by 3, well, a little bit more than 3, so that's where you get 30% value. At about 30% value of VET to vTHO price, then you get about 5% APY according to the vTHO generation rate. Otherwise, the argument is it's better just to buy vTHO and use that money to use that other money to do something else besides buy VET. Now, that doesn't truly hurt VET's price because someone still has to hold the VET to generate vTHO. But it could be that as time goes on, vTHO could increase more than VET. Now, like I said, that's still kind of up in the air. They can actually change the ecosystem. And Jason Rockwood has actually mentioned that once vTHO reaches a certain price, and it doesn't have to be a fraction of VET's price, it could just be like a real dollar price, they will pull some levers, which we don't really know what those levers are, to actually make it even out. That could be they could increase the vTHO generation rate for VET, which would actually negatively impact vTHO's price, but it would actually basically increase the ROI of your vTHO generation. They could actually make each vTHO handle more transactions as well, so to make it actually worth more on a utility basis. So there's many things they could do. They can do a combination of these things. So it's really hard to tell what they will actually do. But if you actually look at the APY argument right now, then yes, vTHO is about 3 or 4x undervalued. However, that's not necessarily true of an asset, especially if that asset is an appreciating asset in itself. Some companies will hold assets, or many of them will actually hold assets that they think will actually appreciate in itself without requiring the generation of an APY. If you truly look at APY for the last year, if you just count vTHO in itself, I mean VET in itself, it's gone up for like 3 or 4 times, so that's 300 or 400% APY for the last year. So if a company actually believes that VET can actually gain a lot of value by itself just by them holding it, I think they'll actually hold VET, especially if they need the vTHO as a secondhand thing. Now, I do think that they will actually make each vTHO actually handle more transactions in the future, or they'll increase the generation rate of VET because VET for vTHO. Because right now, like, there's really not enough VET to there's enough VET to go around, but you have to spend hundreds of millions of dollars in vTHO to make up for that in VET to actually generate the necessary vTHO for a lot of burns. And I don't think companies want that large upfront payment of money, so they'll actually just buy the vTHO piecemeal, at least for right now. I mean, the foundation or someone else that has these giant bags of VET, they will be the ones that are selling vTHO to these companies, and that the increased demand could actually spike vTHO up at some time, and they will pull those levers to actually adjust the price and make the network workable again. But you could actually sell on that spike up and actually make a lot of money. I still like VET more than vTHO, but the APY argument, if you're talking about a non-appreciating asset, which is more of a stable asset, I guess that would make sense. I don't wholly agree with it because VET is not necessarily a non-appreciating asset, and realistically, since it is an appreciating asset, that calculation gets kind of really like murky. Maybe in the long run, if they don't change anything, that could actually be true. But for right now, like, both VET and vTHO have a lot of upside potential. Maybe vTHO has more because it's the direct burn for VET transactions. I still like VET better because then I can just generate free vTHO and get in on the vTHO as well. The supply of vTHO right now is 33 billion, so there's no shortage of vTHO anytime soon. And the generation rate of vTHO And honestly, the generation rate of vTHO is still much higher than the burn rate. So it might actually be a bit of time before that utilities really hits the vTHO burn and kicks up vTHO price, which will push up VET price as well. So take from that what you will. According to the APY calculation, it is true vTHO is very undervalued compared to VET. But if you look at VET as an appreciating asset, then the waters get very, very murky. So that is the news for today. Let me know what you think. Like and subscribe and hit that bell notifications button. Thank you and have a nice day.